Hello, hello, hello. How's everybody doing? 50 pips in the house, rocking and rolling. 26th of April, 2017. No trade calls, no recommendations. Everybody's responsible for their own stuff. We're here for educational purpose only, just trying to pay it forward. Let's get this party started. What's happening? So, here, no fear, right? As we were saying, VIX at lows. Everybody's going to say it's different this time. The models have changed. The market can only go higher. But it's not different. Sooner or later, you'll get this gap filled. Sooner or later, you'll get the VIX back into the high double digits. Sooner or later, you'll see VIX in the 20s, and you'll see something else that will scare most of the children. It's not different. It's not a question of if volatility is going to pick back up. It's just a question of when. Okay, so I'd be very, very cautious across the board. Now, very, very quickly, what's happening on equities? We'll look at the ES. In terms of the ES, after what is happening after the French election, here the base case, right? The base case scenario is that most people will be looking at this break higher, right? This break higher as a breakout gap, and what you'll hear in terms of narrative is that it's almost inevitable that we test those highs again, and that even if we're going to fail, we're going to have to fail after we tested these highs, right? Naturally, nobody has a crystal ball, but what is clear is that there's a big air pocket here. So because it tends to be a self-fulfilling prophecy, also anybody shorts have had to cover their shorts more by pressure to the upside, and even the stubborn shorts are probably staying very, very light or waiting higher. Now, as usual, it's really, hey Luca, it's very different to find a catalyst or understand what could cause this to turn. Maybe it's today when we get the tax plan or whatever comes out of Trump. But right here, what's important, I think, to understand from a learning purpose is that here you've got a little bit of an air pocket. So even the most stubborn shorts will stay very, very light unless we get back here. So focus is going to be at possible failures into these highs. Is this going to stay as a bigger cyclical top? What's going to happen inside this zone? Clearly, there's an open gap. Now, in terms of bull bear lines, what are the bull bear lines going to be? Well, they're going to be those highs, right? And then they're going to be this descending trend line, which is going to pretty much come into play with the gap. So those are the levels to watch, and you have to understand that inside there, it's a bit of velocity of move inside range, right? It's a little bit of no man's land, okay? Now, second of all, and that's pretty much goes with all the equities. Gold, DXY. What's happening on DXY? DXY, basically, we were talking about this coming right back down and descending the bottom of this channel, right, of this triangle, right? So far, so good. What you want to understand is the same thing as stocks. You've got an open gap. As long as we hold below this trend line, chances are we'll come back down and tag somewhere into the 97s, 96s, this area. If we get a day close above, then it's going to be in play for that gap fill, and the 100 is going to be pivotal, right? So what are the bull bear lines going into here? Well, to the upside, it's the 100, and to the downside right now, it's this trend line, right? Day closes above or below this area, which are likely going to mean that either we try and aggressively fill that gap back into the 100, or we continue to extend back down into the 97s. So the key point here is the action we've had this week, right? And this goes for everything. The ranges we've set from the gap, a high or low, and the retracement following the gap, this is where the fight is being fought, and we need to get a close outside this zone to see some more potential Momo. So even though gaps will tend to fill, they don't have to fill today, they don't have to fill tomorrow, they can take years to fill, but most likely the breakout of these zones, whether it's on equities, on DXY, is what's going to define if these are breakout gaps that don't fill for some time, or if they're gaps that end up filling by the end of this week, okay? CL, what's going on crude? Crude, a fairly interesting action. Again, we were short, looking for this to break down even more. All things being equal, would it be healthy to see some kind of bounce? Yes. Any kind of bounce on no substantial news for us is still going to be a sell. for a move back into there, and ultimately we still think we've got some unresolved business back down in the 47s. We're going to have to tag these lows. This is still in play, no change from this short trigger on crude. You know, it could be funky, we get some covering here, but pretty much that's where we stand. Okay, now what's happening? A lot of questions on euro. Again, you can go back on all the past videos. You know, we discussed what the actually, let me get a different chart. The risk to the euro was to the upside, right? Our baseline scenario doesn't change here on euro. We're looking for this is from last year, right? We're looking for a move back, possibly all the way back into the 115, 116, but we do have an open gap we're going to have to reckon with here, right? So tactically, what that means, and again, we'll have to see what happens with the tax plan. We'll have to see what happens out of the ECB. We'll have to see what happens out of the BOJ, right? But right now, it's just a question of, as I highlighted on the ES and as I highlighted on the DXY, it's about these ranges we've set this week so far. Now, I don't know why this is not uploading. Let's see if we can. It's not uploading for some reason. Come on, work with me. If not, we'll have to stay on this chart. Okay, we'll try and stay on. We'll try and stay on this chart because it's not uploading. So you see what's happening here, right? We've got this gap. And right now we've set the high and we've set the low. So the big question is, right now you've got this 300 trying to cap it, is how are we going to trade into the Trump? How are we going to trade into the BOJ, the ECB here? If market does not retrace and breaks out to the upside, then you could see some very aggressive move to the upside, still coming back up to take out those highs. If we come back and trade below those lows, then you would expect that gap to fill. Okay, now, so in terms of risk, is these are the next layers of stop the market's likely want to have to clip. But what you have to understand is, to the downside, even if we end up filling the gap here, you're going to have a lot of support coming in here, and based on what happened, you know, likely buyers trying to come and play for the move higher. So unless something substantial happens here, so our base case is whether we get less risk out of France, less risk out of Europe, whether equities tank, our base case is still that euro needs to rotate higher, right? The only thing that could really throw this off is if you get something funky on the tax, on repatriation, or something that really has a big effect on the USD. But here we would look at this as any retracement back here structurally still is some kind of a buy opportunity to continue to play these longs that we highlighted from November, December last year going into the end of the year. Okay. So that's pretty much what's going on here. In terms of cable, a lot of people are still wondering what the hell's going on, and it's just a lot of chop, right? We're just stuck around this 128, so there's not an awful lot going on. There's not a lot. We're just in wait and see mode. To the upside, 132's calling. To the downside, we're looking for a move back into the 124s. We're just going to have to be very, very patient, you know, as we see all these flows try to unwind post that, you know, post the weekend. ZBs, what's happening on bonds? We're getting some decent two-sided action here on bonds, right? We got that gap down on bonds. As we said here, there's an awful lot of support similar to that euro coming back into play here. We'll have to see if bids come in and support this 151. As long as this level supports, we still think the play is for a move back higher into these 160s. We'll have to see, but this is going to be the big bull bear line, right? So let me see some of the questions. Yeah, I think here, yeah, on euro, this is no, I mean, euro here, the focus, if you look at going back to that question, right? Where's the 200? There's the 200. Sorry, I hadn't. You know, whether you look at the moving averages, whatever you look at, it doesn't really matter. The big levels are still coming to play. So here you can look at the 300, you can look at the 200 DMA, right, or the 300, whatever you want. But that, it doesn't really matter. You see, what matters is Everything you need to know is confined by here. So you could argue, oh, well, you know, as long as it holds above the 200, then it's bid. If it goes back below the 200, it's heavy. Sure, that's fine. But that goes, you can make that assumption whether you have the 200 on or off. You see what I mean? It's about this range. Back above, bullish. Below this weekly range, bearish for a gap fill, correct? Look at this, put the 200 DMA on. What's happening? Well, there you go. Day close above, day close below. Above keeps on staying bullish, back below, bearish for gap fill. You see what I mean? It's the same thing. So, you know, the good levels will be highlighted no matter what you're looking at, right? Right here, we have absolutely no interest in participating on Aussie. We have absolutely no interest in participating on Kiwi. In terms of CAD, we've been talking about the only way to play that off that base at the 200 DMA was long, right? And for a move back higher to clip all these stops. So this is still in play for us. A very nice little action. We said the path of least resistance was to start to take out all these weak players here, and they've all been clipped. So this is going to be a bit of a Momo line here. Higher, everybody be talking about 138s, 140s. Back down, we still have a lot of support coming into play here. So, you know, that's the way to look at this. I know a lot of people getting off guard by the action on USD CHF versus USD JPY, whether you're, you know, as we always say, if you're a junior player, don't focus on correlations that much. You're going to get into trouble because correlations change. Depending on the context, you get different ways of them playing out. So you're actually making it harder than it should be, right? It makes a lot more sense just to stick on each individual chart by itself, look at the resistances on that chart and play the levels on that chart. Whatever happens, you know, as long as you define your trades with risk reward that fits your risk profile, that's all that matters. You know, correlations come and go. Don't make it harder than it should be. Okay, and if you're looking at gold, what's happening on gold, right? Here. You know, as we said, no matter how bullish, structurally bullish you want to be because what you think is going to happen on equities, after this failure at this descending trend line, you know, these were the longs. You're not going to get long here, right, into a brick wall after you've got a failure. So here, the most, you know, the healthiest move on this failure, this trend line, was to see a little correction, right? So right here, we're getting a nice little correction. We've got all these moving averages coming in. So here we're starting to move into an interesting pocket of support, right? 1250s, pretty much pivotal level. So if anything, if this upside is going to continue with any gusto, right, you'd expect this to be the buy zone for the next leg higher. Now, if this whole level gives, then we would not be surprised to see a move back into the 1200s, right? But the way we're looking at this here is we've got these 1250s. This whole zone is going to be pivotal for the next rotation back up into clip through the 1300s or a retracement back into 1200. So it's just a little bit of a range here, right? And we'll have to see how it behaves. But if this rotation is continuing, if you've still got heightened tension out of North Korea, et cetera, you should find bids here to continue the next leg, okay? So again, you know, fairly interesting action, you know, over the weekend. It's just the market being caught off guard. As we said, we call that pretty much in terms of the way the market was positioned offside. And again, it's just a question the market has to now try to reposition and plan for, you know, tax today, BOJ and ECB, right? But if the ECB and the BOJ continue to be fairly positive, you know, we could see these moves extend. We'll have to see what happens tonight. It's just a wait and see game, but as always, the market is just looking in the futures, trying to reprice where it should be. Okay. Hope that was useful, guys. Need to call it a session here. We've got a lot of stuff going on today. So again, we'll catch you up for the weekend update and try and do this again tomorrow. Hope it was tomorrow and try and do this again next week. Okay. Have an awesome one, guys. Thank you so much for following. Thank you so much for sharing. Thank you so much for all the support. Talk to you guys soon. Take care. Bye-bye, guys.